What the China alarming financial crisis means for Bitcoin. China's banks face insolvency risks with widespread mortgage boycotts. The US dollar is strengthening and bringing Bitcoin down in the process. First up is the situation in the Chinese economy. They are facing some major issues in their real estate market, economy, and banking system. Currently, 28 of the top 100 real estate developers have defaulted on or restructured their debts. There is a growing mortgage boycott, where purchasers of unbuilt housing units and projects that are now delayed due to the pandemic, developers' financial situation, and the country's zero-COVID policy have refused to pay their mortgages. The boycott started with 20 projects and has since grown to 235 projects. The rhetoric around this mortgage crisis is eerily similar to that in the US in 2007. Excuses such as, "it is a small number of mortgages and effects are contained" are being offered. As a result of the developer and mortgage problems, small and medium-sized banks are running into solvency issues. Chinese banks have $9 trillion in exposure to real estate. If there was a problem with perpetually falling home prices, it could very quickly cause a solvency issue for banks. Indeed, that is exactly what we are seeing. New unit home prices in China have fallen for the 10th straight month in June 2022. Gross domestic product crashed in Q2 2022 to 0.4%. Since the GFC, growth in China has been slowly trending downward. Then there was the violent economic disruption and whiplash effect in the economy, followed by a return to slowing growth. About Bitcoin, there are also some very interesting observations from Twitter on cash positions in hedge funds and the Bitcoin market. When this turns, it will be violent to the upside. So many funds are down huge, and if they don't make it back in 2H, they're gonna get redeemed. You can't make it back sitting in cash. They'll be forced to buy what's working. Cuppy is pointing out that the percentage of hedge fund portfolios that are holding cash is higher than any period since the dot-com bubble back in 2000. When these peaks happen and hedge funds rotate back into stocks, the market bottoms and has a nice rally. We can also see this effect in the Bitcoin market. At relative tops in the stablecoin ratio, Bitcoin bottoms in price because those stablecoins can rotate into buying Bitcoin and vice versa. That's the causality between these currencies. Bitcoin does not need a weakening dollar to explode higher. In fact, if you look at the history of Bitcoin charted with the DXY, you can see the dollar establishes a new higher range where Bitcoin does sell off. After periods of a rising dollar, Bitcoin tends to take off.